Hello everyone, today I'm taking you to Pennsylvania for an exclusive interview. Darren Foreman was the director of private equity for the PSERS, the Public Employees Retirement System of Pennsylvania, essentially the pension fund managing Pennsylvania's retirement system. He welcomes us today at his home in Greentown to discuss the US retirement system, its funding and the role of private equity. He also shares the strategy he implemented for decades for the PSERS and his perspective on democratization for private clients. Let's dive in. Hello, Darren.
Hello, Damien.
Thank you very much for welcoming us today. First of all, could you please introduce the Pennsylvania Public School Employees Retirement System, the PSERS?
Be happy to. You know, it's an old pension fund. It's been around since the early 1900s. I think it was 1917 when it was founded. And as we are here today, it's around $75 billion in net asset value, so it's a sizable pension plan. And believe it or not, there's 500,000 people that belong to the system. Either they're currently retired or they're currently working, and will be hopefully retired from PSERS at some point. And I checked the investments that they made in private equity. Predates my time at PSERS, but in 1985, they made their first fund commitment to a venture capital fund. So that's 40 years ago. So they have had quite an experience investing in, private equity, the buyouts, venture capital funds over time.
Could you please explain the role you've played within the organization?
Sure. From 2002 to 2024, I worked totally in private equity. Started out as an analyst, worked my way up to a portfolio manager, to a senior portfolio manager, to the director of private equity. And I spent my last few years leading a team of 4 people. And also for 18 months before I retired last year, I was a co-chair of the Asset Implementation Committee, known as the AIC, which effectively was an investment committee. So a lot of the approvals for investments came through that committee, which I co-chaired with James Delgadio, who's still working for PSERS today.
To what extent does a pension fund like PSERS use private equity to finance the retirement programs of its beneficiaries, and why?
Good question. People, investors, limited partners, and public pension plans go to private equity for the returns that over long periods of time are better than what you can get in the stock market or public equity. So we had a CIO in the late 1990s who said, look, we have to really increase our exposure to private equity because we want the performance. And also, as we were talking before, that there are thousands more private companies than public companies. So you want that exposure as part of a diversified asset allocation in your portfolios, whether it's a pension plan or a wealthy investor.
Absolutely.
So in the 1990s, we really increased. We invested in Bridgepoint when they spun out of NatWest Bank. We were in Bridgepoint Fund many years ago. So we seeded them in their first fund. The same thing with PAI in Paris that spun out from BNP Paribas. We invested in their first fund too in the late 1990s and built the program, and we actually put out at our peak in the 2000s, the early 2000s, close to $3 billion a year in commitments. Now it has come down since then because the board in 2021 wanted to further diversify the pension plan's assets. And in 2021, they decided to make private equity's target at 12% of plan assets. And the last I read, PSERS had 16% of plan assets in private equity. So they have to come a little lower to meet the target.
Why is private equity so attractive to pension funds? What does private equity really offer pension funds in the context of financing US retirement systems?
Yeah, another good question. With the great returns that you can hope to attain by investing in private equity, say 300 basis points better than what you can do on average compared to investing in a public equity manager or a stock fund or a mutual fund. So the returns are there, and that helps to be accretive to a plan's target. So if your pension plan has a targeted rate of return of, say, 7%, in private equity today, plans are hopeful to make 10%, 12% on a net basis, net of carry, net of all the fees.
Yeah.
So with that return generation and the expectations for that over what you can get in the public markets, so if the public markets, say, do 7% and you can get 10% in private equity, or a little better than that, especially if you make no fee, no carry co-investments, that's why, because it really helps the portfolio, it helps to plan assets, it helps to pay bills, it helps to pay beneficiaries their retirement checks on a monthly basis. So those are the reasons why. Yeah.
What is the average percentage allocated to private equity by US pension funds?
On average, I would say if you look across the United States, that the pension funds have about 12 to 14% invested in private equity, or at least that's their target. Now, if you go to the college endowment funds and foundations, they may have as high as 30 to 40% in private equity. So it depends on the system, the plan, but those are the percentages as best as I know.
And specifically, how much does PSERS allocate to P? You talked about 12%?
Yeah, 12% is the target in the few years to hopefully they can reach that. But the last I checked, the PSERS quarterly reports, they had 16% in private equity. So that will decrease over time because of the new target. But I will say the private equity was as high as 21% about a decade ago in our plan. But then we've been, since we were one of the first investors, investing in private equity in a large way, it grew, and then we had to bring it back into the asset allocation ranges that we were approved for. And then the board decided a few years ago in 2021, after we had I think it was about a 43% rate of return for the year in private equity, so you could see how it grew bigger and it became to the high end of the range. And then the board said, hey, we should aim for 12% in the future.
What is the size of its private equity portfolio and how much does it commit to private equity annually?
Yeah, if you look at an NAV basis, that's about 12 billion on a net asset value basis for a PSERS. Last I saw in the records. So yeah, and it's like I said, a little over 16%, 16.1% as far as the percentage relative to the other asset classes, fixed income and public equity and private real estate and so on and so forth. PSERS, from what I understand, they commit a few $100 million a year to make commitments to private equity. And as you know, you want to make those commitments every year so you're diversified, because you can't predict which vintage year is going to be a great one, whether it's going to be 2025 or 2026 or 2027. So it's really nice to put out a steady, systematic commitment pace year after year after year. So you participate in that vintage year that turns out to be a great year to invest. You don't know that ahead of time, only if we knew that, right?
Absolutely.
But you don't know that.
It's like the re-up system.
Exactly right.
Has the share of private equity in PSERS total assets increased over the past 20 years? If so, why? If we take like a broader picture.
Yeah. It's different now, the 12% that we talked about. But it was higher than that. Our target was 17% in the early 2000s. And what we did, that's when we were committing, like I said earlier, close to $3 billion or a little over $3 billion per year in new private equity commitments. So we really grew the program from the early 2000s, when I joined in 2002, to work on private equity. And then we had the global financial crisis in 2007, 2008. So then, there was liquidity issues in the financial system. And then from there, private equity, I think, was still in and around 17%. And it grew to as high as 21% after that. And then as the board decided to downsize the target, just to have a better diversification of the assets, came down to where I understand it is today at 16%, with a target to get to 12% in a few years.
Why do you believe it is essential for European retirement systems to embrace private equity?
Yeah, good question. If I worked at a European retirement system, I would really make an emphasis to increase the exposure to private equity in Europe. I feel there's more opportunities, even today, to go into a business in Europe. And if you have a GP like an HG Capital or a CVC or a Bridgepoint or a PAI in Paris, to go in and give the expertise on how to build a bigger, better business. I just think those opportunities are a little more vast in Western Europe specifically than maybe even the United States, because we have many more private equity GPs, managers in the United States than you do in Europe. So those groups, those best groups that you guys are investing with, they have lots of opportunities, and hopefully for Europeans, even the wealthy investors, they can invest more so in private equity than in the past to get that professional expertise, such as your firm.
What private equity strategies does PSERS mostly invest in? Venture, growth, buyout, and why?
Yeah, when I was there, the 22 years I was there up until 2024, we invested mostly in buyouts because we just felt that buyouts presented the most consistent returns in private equity. It still has some elements of risk to it. I mean, nothing is risk-free when you're investing in the financial markets. So for us, the buyouts was probably about 2/3 of the portfolio, and then we were adding greatly to growth equity managers to get a little bit better returns, a little less use of financial leverage in those deals as well. And then we had a small percentage in venture capital, maybe 10%, and then we had some legacy secondary funds that we had in the early 2000s. So we had a little percentage in secondary funds as well.
And what geographies does PSERS mostly target, and why?
As you can imagine, being based in Pennsylvania in the United States, we had a home bias to U.S. private equity funds. But what we were doing over time, during my time there, is adding a great amount to Western Europe and the rest of the world. So when I left, I would say we were probably 60% U.S. exposure-wise and 40% rest of the world, but most of that rest of the world exposure was into Western Europe and some of those GPs that we mentioned before.
Which sectors have you had the best returns in PE from? Software, healthcare, B2B services, and why?
I would say software in the technology sector was the best return because they're faster growing businesses, right, in software. They're high margins, produce a lot of cash flow, they have high revenue growth rates. So for us, we had great returns in software, and a lot of that was HG Capital, Insight Partners out in New York City, and some other firms from time to time that invested in software. Even Bridgepoint has had some software businesses from time to time, and William Jackson and team has done very well investing in software. So I would say software first. Second, business services. I think business services is another good sector in private equity. And then after that, you would have your industrials after that, healthcare, consumers, and the like.
Is it difficult to get allocations in the best private equity funds, and why?
It is. It's very difficult to get an allocation in the best funds, and that's why you need professionals like your Lewis to go and perform the due diligence on these funds. It's due diligence intensive to invest in a private equity fund because the information largely is private. You have to go in and meet with the managers and maybe talk to the portfolio company CEOs to see how the GP is. You may or may not have a consultant opinion as to whether this GP commitment is a one you must have or not. But there's so much demand for the best private equity funds around the world that you really need professionals to build a relationship. So when they raise the next fund, you know that, hey, I will have a piece of that commitment because I'm building the relationship with the best blue chip managers around the world.
And they know you're serious. And,
Exactly.
What is the minimum ticket to get into the best private equity funds?
Yeah. It depends really on the size of the fund. The smaller the fund, you may get in 5 million, 10 million. But the large funds even may have an ability to let in an investor at those levels as well. So at PSERS, we were able to commit, at times 50 million, at times 200 million or more, going through my 22 years there. But I would say, as long as you can commit 5 million, 10 million, around that vicinity, you can get a little commitment into a big fund.
What do you think European retail investors have invested so little to date in private equity?
Yeah, it goes to what we talked about before. It's due diligence and intensive. It really is, and it's hard for an individual to do that to take the time and do all that due diligence. It can take months to do on a commitment, versus you have the expertise of someone. And if you have an investor that wants diversification, then a fund of funds could make sense, because you have, the reporting is centralized. You have the capital that you have to call to make investments. So the individual would have to contribute the cash, and then the money's, the distributions coming back. All of that is centralized by a provider that provides a fund of funds vehicle.
Do you think it is good that retail investors can have access to top institutional GPs?
Yes, because you want to be in the best of the best. So you want to be in the top funds, the top quartile if you can, and then some second quartile. You have to have some of that for the balance in the portfolio. And then what you want to do too is, on a calendar year basis, you want to make a couple of commitments if you can, as an individual, or even as a pension plan. That way you have the diversification, because as we mentioned before, you don't know which year is going to provide the best opportunities, or which years. But if you systematically make commitments each year, that's the best way to do it.
What will be your recommendation to private individuals who want to invest in private equity?
I would say private equity certainly should be a piece of an individual's portfolio if they're able to get access. They're able to qualify, meet the minimums, because you get the diversification. You want to be able to have some of your portfolio on the private side to balance what you have if you are in the stock market or in real estate. Private equity is a great diversifier against those asset classes.
Would you advise them to select feeder funds themselves, or invest through a fund managed by a professional team?
Yeah, you could do a feeder fund, but that would be a lot of work. I mean, if you have the time, you could do that. But a fund of funds is a more centralized vehicle that makes it easier for the individual, because you take care of the administration, the due diligence, the flow of capital back and forth. So a fund of funds in that regard is simpler for the individual investor.
Finally, what can be the expected return of a great portfolio of growth and buyout funds in terms of IRR and money multiple?
I think over the long term, you could expect about 3% better than what the stock market does. So for me, in a buyout fund, as we sit here today in 2025, if we could get net of all fees, let's say a 10 to 12% return, and maybe a money multiple of 1.9 times over time, I think a lot of people would be happy with that. I think returns from the halcyon days of 2021 are going to come down a little bit, because we do have more competition in the marketplace, where we need expertise to pick the best funds, like you said, top quartile if you can. And then for growth equity, I would say maybe a little better than that. Maybe get 12 to 14% net returns, and maybe a 2 times or a little bit better than that money multiple over time.
Thank you so much, Darren. It was fascinating.
Thank you, Damien. It's been great. Thank you so much.